Joining us now is one of the authors of that report, Mark Mahaney, Evercore ISI's head of internet research. Mark, good to see you. Thanks so much for joining us. One of the key takeaways, I guess, was that we're still very much in recovery mode for these rideshare services.
I think you're absolutely right, Wolf. It's going to be a slow recovery, but it is picking up speed, and it is a steady recovery. There were two long-term data points I found fascinating from this. First is that it's about a third of people used rideshare in the last year. And of those who used it, only about 26%, a quarter of them, used it on a weekly or better or faster basis. And to me, that's the long runway of ride sharing, because I think the penetration, the percentage of people who use ride sharing can double, can go from 36% closer to 70%. And the frequency with which they use ride sharing can go from 26% to 50% or more. I just think the value proposition of ride sharing is so broad, whether it comes to commutes, which are coming back, leisure travel, which is coming back, or for social events, which are coming back. It's like there's a lot of growth runway ahead near term and over the next 3 to 5 years for ride sharing. That's one of the reasons we're so bullish on Uber.
And are they enjoying a little bit more pricing power than they have in the past as well?
That remains to be seen. Our survey work tried to suss that out. Our strong guess is that there is a fair amount of price inelasticity here. In other words, most consumers would be willing to take on $1 extra in price for a ride, given how broad the value proposition is. Generally, people look at this as a way to save money, save time, and it's more convenient than taxis or public transportation. I think that value proposition gives Uber and Lyft pricing power in the future.
Mark, I really wanted to talk to you about Lina Khan's surprise move from President Biden to appoint her as chair of the FTC, a very prominent critic of big tech. I know you had to put out a note on this, so clearly it's impactful for investors. What do you tell them about whether this changes the thesis around regulation?
Well, I think this is a signal that regulatory risk is clearly heightened. If you were going to pick one person to run the FTC who has done a lot of really good, groundbreaking work, very detailed work on the perceived need to regulate big tech, it's Lina Khan. So this is the ultimate regulator, big tech regulator, taking over the FTC. So at the very least, what you know is that large-scale acquisitions are off the table. By the way, this is a multi-year trend. There's been greater and greater concern by investors on regulatory risk. I think you've already seen that in the multiples of Facebook, Amazon, and Google. I think they've already been trimmed a couple of turns, a couple of points, precisely because of this risk around regulation.
Is there any one stock that you think by this appointment is due a bit more of a pullback further from where already that multiple's been eroded a bit?
Well, the one thing I found interesting in looking at all the bills, the 5 bills that were introduced, is that they're highly focused on what are called conflict issues. If you own a marketplace and you compete in a marketplace, that's Amazon with its Amazon marketplace, that's Google with its ad network. That's not Facebook, however. So when it comes to conflict of interest, antitrust issue, it sounds like Facebook actually faces the least risk. And I'm not sure it's traded that way. The portfolio managers I talk with have been more concerned of Facebook facing most regulatory risk. I don't think that's true, actually. So Facebook is also one of our top picks. And by the way, so is Amazon. At the end of the day, the question for investors is, does this impact the PE or the E, the earnings growth? And I don't think we're going to see a material impact from regulation on earnings growth. I may be wrong here, but I don't think we will. It's impacting the PE, and it has for several years, I would argue. I don't think it's going to impact the E. So if you get these reductions in PEs, it just makes the stock safer longs over the next 1 year.
Shepard Smith here. Thanks for watching CNBC on YouTube.